January 26th, I took 2 trades today. One loser for 87.50 and then one winner for 125. This was my winner. Literally no drawdown, which was cool. Today was another pretty messy day. Price action wise, no clear trend, not necessarily a clear range either. This is the 2 ranges that I found was this one based on opens support, and the resistance is based off of pre-market highs, not full highs but pre-market pivot highs that lined up with opens high. So hindsight, maybe I could bring it up to here. Just doesn't fit perfectly anywhere really, except for maybe right here. I could have gone a little higher. But here was definitely a point of rejection here and support right here. So I'll leave it there. I think the overall broad scale range is up here. It's going to be basically the range high for this, and the range low is going to be right about here. So that's in essence what we were working with today. Very muddy, just not very structured today, which is fine. It is what it is. So at open we had core PCE. Before open we had that at 8:30, which obviously caused a lot of volatility pre-market. And then after that at 10 we had pending home sales. So I was staying out of the market to let the market respond to pre-market news and open news, and basically we trended out of news. I didn't want anything because we had not established a overall trend and we had not established a range quite yet. So basically waited around, and then I saw this range from here. I did not see that we had already created a new high from this micro uptrend or this shortened uptrend. So we broke out of it, and I thought that this engulfing bull candle breaking through EMA was an indication that we were going to go and retest the highs and get a new high out of this shortened uptrend. But I did not see until I was looking at it after that we already had a new high, and I got in on this candle right here, which was showing a higher low before this entire dump. It looked like a higher low second entry long, and from this pivot, first entry long, second entry long, and I got in. I had my order like this on this hammer candle, and I was waiting for this one to close, and it jumped up and looked extremely bullish, so I clicked my buy when it had I think like 200 ticks left in this candle, 2,000 ticks of data in one candle. So this thing was getting ready to close, so I clicked buy, and then as soon as I clicked buy, it dumped, went straight through my stop loss, got stopped out of that. And then when I looked at it afterwards, I was like, oh dude, this is a beautiful lower high second entry short. So from this pivot right here, this quadruple bottom, we had first entry short, so the first leg short, and then we had second entry short, which obviously nuked us all the way back into this main range. So I was just on the wrong side of the market. Beautiful reversal pattern, which is interesting because usually when we trend up into a consolidation range, you don't break down out of it. If you trend up into consolidation, 9 times out of 10 you're going to break out of consolidation to the upside. We never even got an upside shot. We just came straight back down, which clarified that there is a larger range at play, which is this blue support to this blue resistance. It's just messy. It's a messy range. with 2 micro ranges inside of it. So got stopped out of that one. Still up on the week after this trade. So I was still looking for one more trade on the day. And when we blew through this support of this range, I was looking for a way to fade it to the upside because most range breakouts or breakdowns fail. So as soon as we established a new low off of this huge trend down, I was looking for longs and I was looking for a higher low reversal pattern, which we got right here. And I had my order right here for the buy, and then my stop loss was below this pivot right here for literally this entire, because this thing, as soon as it turned into a second entry long, it just jumped all the way up to this previous support and then rejected it. And I was like, no, there's no way we're not retesting that, especially after a higher low reversal. So I just kept my order there, and they came down, tagged me into the play. I had 0 drawdown. We regained EMA, and I basically brought my stop loss up to where I got out and had a point of movement up to 200 or down to my stop loss, so that it was a riskless trade. Got out for 125, and I was expecting a test of the top side of this micro range, but it looks like we're failing it already. From this point on, everything's pointing up, at least a VWAP. I thought we'd at least get to VWAP, but we're really starting to show bearish momentum because we have turned this previous support into resistance. So it's looking like this breakdown just did breakdown pullback, which is a verification of a breakdown that looks like we are going to trend out of this range to the downside, assuming we could sweep the lows and create a trend here. But either way, I'm up on the week. We had 6 trades, up 287. Win percent is 66%. Expectancy of almost $50, which is awesome. That's on par. I want a minimum of 45. Total P&L after fees is 269. A lesson of the week is I undertraded heavily. I want to take at least 10 trades a week. I only took 6. That's because I like to take at least 2 trades a day. There's like 5 setups minimum usually that present themselves on any given day with my strategy, and I've usually only been taking 1 of them. So I'm underperforming with an expectancy of 47. If I actually took my 10 trades, I'd be up almost 500 on the week instead of 269. So lesson of the week is don't undertrade. Usually it's a problem for most traders of overtrading. Mine is the opposite. The glory of this 269 is I have 8 accounts. 269.5 times 8. Yeah, so I'm actually up 2100, which is cool. It's still underperforming though. But that's the glory of having really good risk management and looking for just base hits, is you'll have a profitable strategy that is very low risk, and you can multiply that over multiple accounts and take your base hits, multiply them by 10 or 20. Ultimately, I want 20 accounts. I'm shooting for the full 10 right now. You make a measly $300 a week per account. Multiply that by 10, that's $3,000 a week. Multiply that by 20, that's $6,000 a week. And that's underperforming, you know. I'd like to be making the $500 per account per week, which would be $5,000 with 10 accounts, and then $10,000 with 20 accounts, and then at the end of the month I'm able to get 20 to 40K in profit. That's how huge using a trade copier over multiple accounts is. This is my lead account. Average losing trade is below 100. So we like that. Average winning trade is 118. It's above 100. We like that. The only reason why it's so low is because I had a $25 win, which was an outlier. That was yesterday, so it brought my average down quite a bit. Before that, it was like 137, maybe 147. I can't remember. Good week, profitable week. Underperformed though, and that's because I only took 6 trades on the week. I should be taking 10 for my strategy. But as you can see, 150, 175, negative 100, 25, negative 87, 125. Pretty decent. We're just going to continue to hit base hits, not look for crazy grand slams, and we're going to copy that over 8 accounts and continue on. Try and get as many PA accounts as I can and stay on the grind. Next week it looks like I should be getting a few accounts. Yep, that's the end of the week. Happy Friday. Happy trading.